Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Brent crude slumps 4.5% after Israel strikes on Iran avoid oil and nuclear facilities. The US president says he hopes the restrained response will end the cycle of escalation. The yen weakens and stocks rise after the Japanese Prime Minister's early election gamble backfires, his ruling coalition failing to win a majority for the first time in 15 years. Plus, the final full week of the US presidential campaign kicks off with Kamala Harris wooing minority voters while Donald Trump holds a Manhattan rally. We're going to have the latest. Happy Monday, everyone. What a massive week for these markets, with 5 of the Mag 7 reporting later this week. We have economic data as well to factor in terms of the growth picture for the US, and then payrolls print as well. Non-farm payrolls on Friday. It's a huge week. We have the BOJ decision and the politics of Japan to consider as well. European futures pointing to gains after ending the week last week in negative territory. US stocks as well were in negative territory. A weaker week for US markets. The first time after a week of 6-week run in terms of positivity and gains for US stocks. That eroded last week. We'll see how the picture shapes up this week then. In terms of the futures, when it comes to the UK, FTSE 100 futures currently pointing lower by about 0.1%. Certainly the pressure on the oil market could be a factor for UK stocks. S&P futures pointed to gains of 0.4%. Nasdaq futures looking to add 108 points, currently up 0.5%. Let's flip the board and look cross-asset because the bond market sell-off has resumed. It is expected to be a volatile week or so for these bond markets, given the data front, given the expectations around central banks, and given, of course, the US election and that potential outcome, or whatever the outcome is, on November the 5th, 6th. Currently, your 10-year is yielding 4.27. Yields are up 3 basis points in the session. The Japanese yen under pressure at the weakest level in about 3 months. On the politics, of course, of Japan, we'll break that story down for you in detail. Currently down 0.8%. Brent crude under pressure then, down 4.5%, as we said in the headlines. And iron ore getting a bit of a lift, up 2.3%. So maybe for the UK session, that will offset some of the pressure on the energy markets, currently at $103 a tonne. Let's cross over right now to the Middle East, of course, where the focus is on that retaliatory action from Israel versus Iran. Israel striking military targets across Iran early on Saturday, delivering on Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage 3 weeks ago that fanned fears of sparking a region-wide war. Let's bring in Bloomberg's Dan Williams in Jerusalem. Dan, the Israeli strikes then were more restrained than many had expected. What does it tell us about how this crisis evolves from here and the thinking behind this decision from the policymakers, Prime Minister Netanyahu and his team in Israel?
I think there are 2 reasons for the apparent restraint of the Israeli attack. One is the United States. We're days ahead of a US election. The Biden administration made quite clear, publicly and obviously privately, to its allies in Israel that they were not interested in seeing a significant spiraling of this Middle East conflict just days from that election. And they also drew a line around drew a line under the nuclear facilities of Iran, the oil export facilities, urged the Israelis to choose military targets. That's what Israel did. As for Israeli calculations, direct Israeli calculations, Israel still has its hands full in Lebanon. It still hasn't finished the job in Gaza. And the Israeli strategy appears to be one front at a time, meaning signal to the Iranians that Israel is willing to confront Iran if necessary, but not necessarily trip up a unbridled confrontation there. So those 2 factors appear to be mainly what motivated Israel's choice of targets in this round.
OK, so the factors that Israel considered in taking out some of these military facilities in Iran, and now, of course, we scrutinise and pass the language coming out of Tehran about the potential Iranian counter-response. What have we been hearing in terms of the messaging coming from Tehran?
It's been quite muted. It would seem the Iranians are biding their time when they do their own damage assessments from this attack. There have been public statements appearing to play down the extent of the success of this Israeli attack, but we have to examine that in comparison to what the Israelis have said. If there is truth to Israel's claim to have effectively neutralized the advanced aerial defenses fielded by Iran, including Russian-supplied S-300s with large ranges, very advanced systems. And if there is truth to Israel's claim to have essentially retarded Iran's ability to manufacture new ballistic missiles, what we now have is an Iran with a limited supply of ballistic missiles that it cannot replenish in the near future, and limited means of fending off a future Israeli attack using warplanes, potentially one that would target nuclear facilities or oil facilities. It's worth noting that Israel has not ruled out the prospect of an Iranian retaliation for this retaliation. However, I imagine the Iranians now are thinking very carefully whether it's time to husband their resources, potentially to back off, and at least to await the US election to see what the future holds in terms of policy from Washington vis-a-vis Israel and Iran and the wider Middle East.
OK, fantastic context, of course, on another crucial weekend for the region. Bloomberg's Dan Williams joining us out of Jerusalem. Dan, thank you. Let's cross over right now to Singapore. Abraham standing by for a check on the Asian markets with a focus, no doubt, on what's happening with the Japanese yen. Strength for the Nikkei.
Absolutely. I mean, we are seeing the Nikkei in the initial start to the day managing to pare mild losses, gain as much as 2%, and mostly hold that into the close amid the backdrop of, as you say, that yen weakness, the speculation that political uncertainty is going to affect the BOJ's path to normalization. I will talk a bit further on the yen in just a bit, but also wanted to highlight what we're seeing on the Chinese gauges looking pretty flat. This is a week where the big banks report. We're going to be watching for the sense of how stimulus is working its way through the system in the form of credit demand. Let's flip the board, take a closer look at the yen, where it has lost about 1% against the greenback, as much as 1% against the greenback from earlier in the session, but also losing ground against the pound and the euro. Obviously, these are going to be the crosses that will receive more attention as Europe wakes up. Flip the board again. Wanted to highlight CFTC data, which shows you that leveraged funds as well as asset managers, they are turning bearish on the Japanese currency. Again, if we can flip the board and take a look at this chart, and it'll show you that they are building up the short positioning on the Japanese yen, but that actually pales in comparison to what we've been seeing earlier on in the year, which suggests that we could see more room to run on that trade. Tom.
Abraham, thank you very much indeed. Joining us out of Singapore, checking the markets, of course, with the lens of Japan. We stay on the Japan story because Japanese Prime Minister Shigeru Ishiba has promised to restore stability after his gamble on a snap election backfired. His ruling LDP, or Liberal Democrat coalition, failed to win a majority in Parliament for the first time in 15 years. For more, let's bring in Bloomberg's Yuko Takeo live from Tokyo. Yuko, what led to the loss and what happens next?
It's a mixture of factors that fed into the loss. Broadly speaking, people are dissatisfied with inflation and the lack of wages catching up to those prices rising and eating into everyone's purchasing power. But a major reason is voters thought that the LDP hadn't done enough about its slush fund scandal. Placing Ishiba at the top of the LDP, the calculus was that that might boost the popularity of the ruling party temporarily at least, and lead it to a victory. But voters seem to think that that's not enough for the LDP to have truly cleaned out its house. And the verdict seems to be it really hasn't done enough in cleaning up its act over the slush fund scandal.
Yuko, what are the policy implications then? And does Ishiba survive as Prime Minister?
We're yet to see how long Ishiba may last. He's just spoken maybe an hour ago. He seemed to suggest that he wants to continue and take responsibility by continuing on his path for now. But the implication for policy would be that it's a weakened government in Japan for the foreseeable future. And that could mean that policies could take a while to be passed through Parliament. We could see a stalling of any policies out of Japan, and we could see more populist moves from the LDP as a result of this weakened coalition as well.
OK, Bloomberg's Takeo in Tokyo on a really consequential weekend then for the politics of Japan, and plenty more to assess in the days and weeks ahead. And, of course, the implications for policy. BOJ meeting later this week on Thursday, not expected to change rates at the meeting this week. But, of course, in terms of how the political framework evolves, will be fascinating to watch. Thank you. Vice President, meanwhile, Kamala Harris, switching focus to US elections, has kicked off the last full week of campaigning. The last full week of campaigning in Philadelphia. It's come around quickly, hasn't it? Wooing minority voters. Meanwhile, former President Donald Trump held a rally in New York's Madison Square Garden, where Elon Musk claimed he could cut $2 trillion from the federal budget. Let's bring in Bloomberg's opening trade anchor Kriti Gupta to assess what we've been seeing from both candidates. Kriti, your takeaways from pretty remarkable set of events from both candidates. I mean, particularly what's evolved and come through from the Trump event in New York.
Yeah, let's talk about this. Madison Square Garden, which, of course, for our international audience, a very key venue in New York City and, of course, in the broader United States as well. If you have a major concert, that's where you go to go see it. So the fact that not only he's gotten that access, but that he's filled it with some major speakers. You mentioned Elon Musk there as well. He had another kind of slate from Tucker Carlson, who was the former Fox News host, who has been doing the initial interviews with President Trump, but has also interviewed the likes of Vladimir Putin as well, but has a massive following in the South. And this is a really key point in the fact that he is now instilling and bringing up people who have big followings. Elon Musk is a poster child of that dynamic. The idea here that you're trying to get votes and trying to get these endorsements, I would argue this is similar to perhaps the Harris strategy of getting a Taylor Swift endorsement or a Beyonce endorsement or things like that. You're basically trying to garner as much of a following as you can in these last couple of days of the election. Yeah,
in some ways it's a tussle between the A-listers, isn't it, in terms of how this plays out. I wonder if there's a risk of us normalising some of the language that comes through from Trump and the people that appear at his campaigns, the demeaning language, the degrading language, some would say racist language as well, from some who stood up there on the stage. And that's something that people have been writing about this morning as well. What have we been seeing when it comes to Kamala Harris and her campaign, whether she's getting any more traction when the polls suggest, at least in some parts of the swing state move, that Trump still has something of a lead?
Yeah, the polls are, again, neck and neck, because they're swinging day by day. And my margin that is the tiniest margin that you've seen within the margin of error. That's how close this race is, and really emphasize the idea that we might get a delay when it actually comes to counting the votes. Kamala Harris, though, is doing a similar strategy in that she's trying to really tackle the issues that she is most, that kind of trying to sway independent voters of. The border is a key sticking point for the Harris campaign, simply because she did have that role in California prior, and that is where most of her criticism is coming from, given Donald Trump has been far more vocal about his immigration policy. Kamala Harris less so, given that she is still serving as vice president under the Biden administration. So that is where her criticism is coming from. She is still trying to kind of court that vote, and that's going to be a key part of her strategy, again, in the last couple of days.
Kriti Gupta, thank you very much indeed. Opening trade anchor with the latest, as we are just a little over one full week, of course, away from that US election. Here's what else to be thinking about this week then. On Tuesday, we're going to get the JOLTS data out of the US. Again, it's a big week in terms of the data story stateside, because we have non-farm payrolls on Friday, of course. On Wednesday, we're going to get the UK budget, really consequential for the future of the UK, the balancing act of Chancellor Rachel Reeves and the Prime Minister Keir Starmer. Where will the tax hikes land? And on Thursday, Apple and Amazon report earnings. Again, 5 of the Mag 7 reporting earnings this week. Coming up, oil plunges after Israel strikes against Iran. Avoid the country's crude facilities. We discuss what it means for diplomacy across the region. And Philips slashes its sales growth forecast for the year, citing tepid demand in China. We're going to speak with the CEO of that company, Roy Jakobs, about that issue and much more. That's at 6:40 a.m. UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's check in on oil prices then. A sharp move lower, down 4.3%, as you can see, on Brent. Israel attacking Iran, retaliating against Iran for its own ballistic missile strike. And the reaction in oil markets is prices are down. Why is that? Because markets had been pricing in, to some extent, the risk that Israel would target oil facilities or indeed potentially the nuclear facilities of Iran. That is not what happened. So there's some risk-off move that's coming through, and prices are lower on Brent WTI. Let's get more on this story. Iran is downplaying the impact of Israel's strikes over the weekend, suggesting it may not respond in kind. Let's bring in Jane Kinninmont, then Policy and Impact Director at the think tank, the European Leadership Network, someone who has deep expertise on this region. Jane, is the fact that Israel targeted Iran's military facilities rather than oil and nuclear actually de-risking the conflict that is evolved in that region?
Good morning, Tom. Well, it's all relative. What has happened has certainly been more measured than some of the predictions were suggesting, and certainly it doesn't seem that Israel had any grand ambitions to change the regime in Iran or anything that people were excitedly writing op-eds about in America. But one key concern is that this is actually the second time this has happened this year, the second time that Israel has struck inside Iran after two occasions when Iran has struck inside Israel. And we are seeing this gradual escalation, even if each side is weighing its move carefully and trying to avoid an all-out war. The dynamic is gradually ticking upwards. We will see key uncertainties around the US election as well. We do have a US administration currently that has been very keen to ensure Israel's response was measured, but things may well change in the coming weeks.
Jane, how do you expect Iran to respond to this?
Iran is really in a bind, and they are quite divided in some ways internally, as is Israel, about how to handle this situation. Most likely, they will not have a significant response soon. They are trying to downplay the attack, to say that it was largely unsuccessful. And Iranian leaders have also been saying quite consistently that they don't want to be dragged into a regional war. They, in fact, portray it as Netanyahu's agenda to drag them into a war. So they say we're actually showing more strength by not responding. Of course, this is also underpinned by the fact that their military is conventionally inferior to Israel. At the same time, Iran has said that 4 of its soldiers were killed in the attack. That's from the Iranian army, not the Revolutionary Guard Corps, which is responsible for the relations with Hezbollah, Hamas, and so on. So that does mean there are some hawkish voices saying they should respond, but their options are quite limited. Longer term, it does increase the risk that Iran might make a political decision to weaponize its nuclear program because, as far as it's concerned, it is losing its deterrence vis-a-vis Israel. So then Israel will be motivated to try to scare Iran away from doing that. Israel will probably continue to want to signal that they have options to attack Iran's nuclear program, especially if there are any signs that that is moving towards a weapons program, which so far has not been the case.
So that's a potential longer-term risk for the region. Is Iran making it clear that it would be moving towards nuclear weapons and using that program for that purpose? Talk to us about how the region, what the implications would be of a Trump presidency for this region, given that on one hand he's shown very little sympathy to the Palestinian cause and the suffering in Gaza, but on the other hand he was someone who was the architect, at least his team was, of the Abraham Accords and a close relationship at least with Saudi Arabia.
Trump is relatively unpredictable on this because he has instincts that go in two different directions. You know, one is that clearly he's not somebody that wants to get stuck in a war where he would have to have significant amounts of US money and US troops caught up overseas, especially in the Middle East. He wants to focus at home. At the same time, he has been extremely hawkish on Iran, and last time he was the president, he did appoint a number of key Iran hawks, including John Bolton, the type of people who do talk about regime change. his son-in-law, Jared Kushner, has been one of the people in the US talking quite enthusiastically about the opportunity for Israel to forge a new Middle East by military action against Iran's allies in the region. So really it could go either way. There is still an opportunity for some kind of diplomacy with Iran, and it's likely that Iran would be trying to express interest through back channels in something like that, whether it's Harris or whether it's Trump. There might be attempts to de-escalate and involve the US in doing that. That might appeal to Trump's sense of himself in a way. He does consider himself to be a deal maker.
Okay. Jane Kinninmont from the European Leadership Network, thank you very much indeed on a potential Trump presidency, what that could mean for the region and how, of course, the Middle East is readjusting to that retaliatory strike by Israel on Iran. Jane, thank you. Coming up, Volkswagen is reported to be planning a universal pay cut as it looks to rein in costs. We're going to bring you the details next. This is Bloomberg. Welcome back. Happy Monday. Now, Volkswagen has reportedly drawn up restructuring plans targeting cost savings of about 4 billion euros. German newspaper Handelsblatt says the proposals include a universal pay cut for workers. Let's bring in Bloomberg's Oliver Crook with the details. Talk us through what we've learned about this potential restructuring then, Ollie.
Yeah, listen, Tom, so this is what we got from Handelsblatt over the weekend, and this is the Volkswagen brand. So just to be clear, this is not the group. These are the cars with the actual VW printed on the front. It's a really important brand because it's their mass market volume sort of brand, but it's also one that's been really struggling with getting the margins up and is really sort of bloated on the cost front. What they are talking about now, according to Handelsblatt, is saving 4 billion euros from this brand. They're talking about a 10% universal pay cut across the board. I mean, just imagine what that would feel like for anybody to lose 10% of their paycheck. Wage freeze is not only into next year, but the year afterwards. And then, of course, the thing that hangs over all of this, Tom, is the possibility of factory closures. And we should just say, Tom, and I think it's worth reiterating every time we talk about this, Volkswagen, in its 90-year history, has never closed a factory before in its history. It's now talking about closing potentially several.
Yeah, this is a remarkable moment then for this brand and this automaker. What happens next, Ollie? And when I think about pay cuts across the board for some of these workers, I, of course, think about the unions and the strength of the unions in Germany. What are you watching for in the days and weeks ahead?
Yeah, so what we're going to get today is an update from the Works Council to all of the factory workers, and then we have those wage negotiations that are going to resume on Wednesday. But Tom, I just want to paint a picture for you. At 11 o'clock today, across 11 Volkswagen factories in Germany, all of the workers are going to walk out for 1 hour in order to receive an update from the Works Council in terms of where these negotiations are. Now, that is important for two things. For one thing, that could be something that we see a lot more of in the months to come. I'm talking about potential strikes. They've talked about warning strikes potentially across the board if the wage negotiations don't go where they would like them to go. But Tom, the other point to make here, Volkswagen employs 300,000 people in Germany. We're talking about 11 manufacturing sites. Every single worker that is going to walk out from that factory floor today is going to be concerned about the future of their job and what this economy looks like going forward. So, Tom, for us in this moment in Germany, this is really the moment where we get off of the sort of earnings statements, off of those sort of PMI charts, and we're talking about the real economic impact in people's homes. And that has, of course, huge economic consequences, but of course also political consequences, Tom. And to say also from what we learned from the earnings, these car companies don't really expect things to turn around really anytime soon.
OK, Bloomberg's Oliver Crook, thank you very much indeed on another consequential moment in the auto industry of Germany, what it could mean for the broader labour force, of course. And Ollie will be keeping across that story for us as it continues, of course, to evolve. Thank you, Ollie. Later at 7:15 a.m., by the way, UK time, on the opening trade, we will be speaking. Ollie will be speaking with the CEO of Bosch, a company, of course, with exposure to that auto market. So that is worth tuning in for if you want to get a better gauge of how that sector is evolving. Coming up, troubling times for the German electric aircraft pioneer Lilium. We're going to discuss what it reveals about deep tech in Europe. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Brent crude slumping around 4.5% after Israel strikes on Iran, avoid oil and nuclear facilities. The US president says he hopes the restrained response will end the cycle of escalation. The yen weakens, stocks rise after the Japanese Prime Minister's early election gamble backfires, his ruling coalition failing to win a majority for the first time in 15 years. Plus, the final full week of the US presidential campaign kicks off with Kamala Harris trying to woo minority voters while Donald Trump holds a Manhattan rally. Let's check in on these markets then. The countdown to the US election firmly at play. The earnings story as well. 5 of the Mag 7 reporting this week. And then, of course, you have decisions from the likes of BOJ and important data coming out of the US with non-farm payrolls on Friday. European futures pointing to gains so far in the session, up 0.3% after the losses of last week. FTSE 100 currently down about 0.1%. S&P futures looking to gains of around 0.4% after ending a 6-week winning streak last week. US stocks, the S&P ended in negative territory. Nasdaq futures pointing to a pretty solid session, adding 122 points so far, looking to add 0.6%. Let's split the board cross asset. The sell-off in treasuries continues on Monday, and again, it's likely to be a volatile week or so for the debt markets. You have the Treasury issuing its announcement around debt issuance on Wednesday. Then, of course, you have the data front as well before the elections. Your US benchmark 10-year currently yielding 4.28. The Japanese yen under pressure, but pairing some of the heavier losses, currently down 0.7% versus the US dollar. Brent under pressure, down now 4.3% on the story out of the Middle East. And iron ore getting a lift, up 1.7%. So we watch the miners and the energy stocks at the open. Let's get the details in terms of the Middle East then, and Israel's decision to strike military targets across Iran early on Saturday, delivering on what Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage 3 weeks ago that fanned fears of sparking a region-wide war. Tehran is downplaying the impact of the strike, suggesting it may not respond in kind. Let's bring in Bloomberg's EMEA News Director for the latest, Ros Mattison. Ros, crucially, what does this tell us about the role of the US? The US, on some measures, has been relatively unsuccessful in being able to constrain Israel, arguably. Maybe on this measure, this was a success for the Biden administration. How are you thinking about the role of the US?
Well, we know they were talking, obviously, for weeks in the run-up to this action by Israel in the early hours of Saturday. There was a lot of conversation going on, no doubt intel sharing as well. We know the US was pushing Israel heavily to avoid hitting those oil installations, to hit the nuclear sites and to focus on military targets only. So on the surface of it, this is a win for the US and shows that Israel was listening. But was it really? That's the question. Like, what was the intent of Israel in the way that it carried out these strikes? I mean, we know very much that Israeli Prime Minister Benjamin Netanyahu does not want an all-out war with Iran, at least for now. What he wants is to focus also on the situation inside Lebanon, where Israel's been working very hard to degrade the abilities of Hezbollah. If you get into a full fight with Iran, that makes that a lot harder. They seem to have some momentum there against Hezbollah. So you want to focus on that because the Israeli military is pretty stretched. It's in Gaza, it's in Lebanon on the ground. And do you really want that extra front with Iran, the big front at this point in time? We also know that, this actually showed they could fly, 100 fighter jets in a long-range mission, refuel them, hit these targets precisely, and really take out air defence of Iran. So in taking out the air defences, what message are you sending? We're weakening your ability to fire at us. And if you do it again, we'll come back. And perhaps the next round would be nuclear sites or oil installations. They've certainly left that open. So right now, yes, no escalation directly between Israel and Iran, but certainly reading the tea leaves, you can see they're leaving those options open.
OK, so from regional security in the Middle East to regional security arguably more focused on Europe, with the question mark about NATO. And this has, of course, been a long-running question for the presidential candidate, Donald Trump, of course, and now his vice presidential candidate, J.D. Vance, seemingly suggesting that they would be open to remaining in NATO. This has been remarkably a continued question, but not necessarily full-throated support from J.D. Vance. What do we take from what we've been hearing from him?
Well, that's right. Yes, JD Vance weighing in on foreign policy and the complex issues around NATO, but certainly in line in a way with Donald Trump. I mean, most recently, Donald Trump has indicated he wouldn't pull the US out of NATO, but what he's been saying is he wants other countries to still pay more for the collective defence. Again, they've singled out Germany quite often, although Germany has increased its defence spending. That has to be noted. But also in line with Trump, who says, well, if all countries aren't pulling their weight, maybe if there is a need, we wouldn't go and support them. So we'll selectively support countries inside NATO, which kind of really destroys the idea of collective defence to begin with, and also echoing Donald Trump on Vladimir Putin, really calling him a competitor versus an enemy, and saying he's sort of like putting him in the tent of that and saying, again, you need to perhaps deal with Vladimir Putin on Ukraine. You need to bring him into the conversation to try and end the war. So those are all kind of warning signs, really, for NATO if you're thinking about security, particularly, again, in Eastern Europe, the Baltics, the Balkans, in coming years, where they've been trying to bulk up their defences against Vladimir Putin. Is that something that, the US under Donald Trump would continue to support?
Yeah, you can imagine certain officials in Moscow tuning in for that particular piece of commentary on how to characterise Vladimir Putin. Ros Madsen, thank you very much indeed, our news director for EMEA, on both what is evolving in the Middle East and the question mark still about US participation in NATO under a Trump presidency. Now, some other stories making news this Monday. UK Prime Minister Keir Starmer says his government would, quote, embrace the harsh light of fiscal reality in the upcoming UK budget. This as Chancellor Rachel Reeves prepares to reveal a package of tax hikes and extra borrowing in Wednesday's long-awaited budget statement. France's credit rating has been put on negative outlook by Moody's Ratings. It is the third warning in the space of 2 weeks and comes amid the deterioration of public finances and the political challenges in containing the budget deficit. Moody's says the decision reflects the increasing risk that France's government will be unlikely to implement measures that would prevent a deterioration in debt affordability. And Bloomberg has learned that Boeing is planning to start raising more than $15 billion of capital as early as today. Sources say the transaction could include shares and debt that can be converted into equity. The embattled planemaker needs the money to maintain its investment-grade rating and pay for eventual recovery from a crippling strike by factory workers that continues. And German electric aircraft pioneer Lilium has said its main subsidiaries may be forced to file for insolvency proceedings within days. That was on Friday, a week which saw its share price tank as much as 63% after the German government denied the company a guarantee on a €50 million loan, at least a state government in Germany. My next guest says the situation highlights a core issue for European deep tech. Strong R&D, but weak commercialisation. Daria Saharova is managing partner at VC firm World Fund. Daria, good morning. Thanks for joining us. Talk to us then about what Lilium does tell us, because we've had a number of failures and at least challenges when it comes to some of the startups in deep tech in Europe, whether it's Northvolt in Sweden, whether it's Graphcore here in the UK, now Lilium in Germany. Does it tell a broader story about the challenges of developing this technology in Europe?
Yeah. Good morning, Tom. A very good question. So for me, from the perspective as a venture capitalist, I think the Lilium situation is a disaster. And I think it very clearly shows that we as Europe fail to support innovative deep tech companies through the growth phase. And this is something we really have to be louder about, especially with Lilium. You just mentioned Lilium is a electrical aviation craft startup being founded 2015 here in Munich, and so far they have only raised 1.5 billion without any kind of support from state. They also employ 1,100 employees. So for 18 months, they've been in the due diligence process by KfW, which came out positive. Just 3 days before the official announcement of a credit line of a guarantee of 50 million, which would, by the way, unlock more capital also on the private side, it was announced that they will not get it. At the same time, they just announced that they're going to go into they will try to go into a self-administration insolvency, which also could signal for us that the company will focus on their core business and go through a restructuring and still survive. But I think as a deep tech company, that is just very hard to survive in Europe, right? And there were a lot of criticism saying, like, why one state should support one-off company, right? But there is no such a thing as a growth market in Europe, and especially in Germany. So looking at that,
Daria,
I do believe that, that the state
Daria,
should go...
what lessons... No, I just wonder what lessons Europe can take from the US on this front.
Look, I think Lilium could be easily comparable to Tesla, right? Tesla raised $30 billion in US dollars before they started being cash flow positive. They also were considered a luxury goods. That's what critics also say about the Lilium taxi. And there was a $465 million is a credit line guaranteed to Tesla, which was instrumental in their survival. So we are talking here about 50 million guarantee. I think it just like set to compare, to be honest.
Your fund has recently raised 300 million euros. That was back in March. What part of that is going to be? How much of that is going to be put towards the growth funding stage, the later stage funding for businesses, if any at all? And what opportunities are you seeing right now, given the challenges that you've just outlined for us?
Yeah. Indeed, we raised 300 million. That makes us one of the largest climate tech VCs in Europe. We focus in our functioning as a multi-stage fund. So we would like to invest more capital in the early growth of deep tech companies in the climate space. And this is a part of our strategy. Of course, we truly believe that the decarbonization of industries is the core engine of the future development, and decarbonization of aviation, coming back to Lilium, is a core in what we believe. We have invested in companies like Custom Cells, which is a supplier to Lilium on the battery side, and we believe that kind of geopolitically, we did lose the run for the EV space in automotive, but we can actually, as Europe, become the leader in the electrical aviation.
OK, Daria Saharova, managing partner at World Fund, on the challenges facing some parts of this European tech space, but also the opportunities as well. Really appreciate your insights this Monday morning. Coming up, Philips slashes its sales growth forecast for the year, citing tepid demand in China. We're going to speak with the CEO, Roy Jakobs. That's next. This is Bloomberg. Welcome back. Now, Philips has slashed its sales growth forecast as tepid demand from China weighs on its order book. The Dutch medical technology firm expects comparable sales to grow between 0.5% and 1.5% this year. That's down from a previous forecast. Joining me now is the Philips CEO, Roy Jakobs. Roy, good morning. Thank you for joining us. The stock is up 45% year to date. You've resolved some of the issues when it comes to the devices in the US, and investors have rewarded you for that. But now comes the challenge of China. What is behind the slowing order intake out of that country?
Yeah, so in the third quarter, we saw two trends. One was we saw very strong margin delivery of 160 basis points up in the quarter. And that was on the back of flat growth. And that growth was impacted by further deterioration in China, whilst we see also continued solid growth in line with the range of 3 to 5% in the rest of the world. That also caused us to adjust our full year outlook for sales, including China, where we also further reiterated our strong guidance on margin and on cash.
OK, so you're reiterating the guidance on margin, and that remains even out of the China space. I'm just trying to understand what's happening in the China market, because they've had this anti-corruption campaign, and that's sent chills across the broader sector. Is it that, or is it the slower growth environment? Is the combination of the two? Which is the biggest headwind?
Yeah, so if you look at China, actually, I think it's important to look at two different drivers that we see currently causing impact. One is on the consumer side, because we also have a consumer business in China. We have seen low consumer confidence, translating into lower sellout and leading up to the big day 11/11, which normally is a massive sales event in China, we see actually that the sell out towards that is expected to be low, and therefore also reduction of sell-in volume. So that's consumer side. Then on the healthcare side, we see the anti-corruption campaign continuing to have an impact on slower growth in China, and the visibility on moving forward on that is just low. That caused us to be adjusting our full year outlook. Whilst on the other side, we see actually solid growth in the rest of the world. We are very confident in the North American market, where we have seen actually momentum growing in the quarter. And actually we have seen that growing across 2024, and we expect that also to continue in next year. So you see actually a world where you see growth at different clock speeds, and we need to rally around where the growth is happening.
Just going back to China, I see the US picture is a slightly brighter picture, isn't it? But when it comes to China, the persistence of the challenges, the weakness across the consumer and healthcare part of the story, does that persist, do you think, Roy, into 2025?
So currently what we said is that the visibility as we have, and I think also it showed in Q3, is that actually that visibility is low. So uncertainty will remain. And that will remain for, we believe, the next few quarters. So it's hard to exactly say, and we don't want to get ahead of that. So what we stay is vigilant on what is happening in China, whilst therefore we focus on what we can do in the rest of the world. 3 weeks ago, I was in Indonesia, another growth market that actually is investing in healthcare, where they really need healthcare solutions. And actually we are dialing up our support to that country. I just closed an AI collaboration with the biggest private hospital chain there to really make sure we can help them with staffing challenges, because they just don't have enough doctors. But I was also in the US last week discussing with the Chicago hospital systems how we can support them, because actually they also don't have enough staff, and they're looking for innovations with AI to support them to actually dial up to serve more patients. So you see that there are different parts in the world really looking at healthcare in crisis and how we can support that. And then in China, there's a new reality that we are taking into account, at least for the near term. But it's also important to stress that longer term, we believe that China remains an important market for the world. There are many people there, many patients and many consumers. And whilst the China economy is transforming itself, over time, it will come back to growth, and then we are very ready to actually capture that growth when it comes back.
So that's the longer-term view on China. In the here and now, are you seeing any of that stimulus come into play? You talked about the weakness when it comes to the consumer. Is there anything that's happening in terms of the stimulus that's leading at least to some green shoots there? Are you seeing the impact of stimulus?
Currently, and I think that also shows in the numbers, we don't see the impact yet. Visibility on when it's coming is low. Therefore, we need to be prudent on our China outlook. And that's also what we have been taking into account. And that's where kind of then looking at what we can control, we also have been focusing on first margin stabilization and improvement in China, but then also in the rest of the world. So actually, we have been driving up our innovation gross margin. Our productivity plan to date is above 1.5 billion realized, and also as a result, strong cash realization. And as you also started, we have been further resolving some of the risks that we also had as a result of some of the recall challenges. So we are making progress on our plan. Actually, plan to date, we are ahead of all the parameters, sales, margin, and cash, based on a very strong start in 2023. Now we need to take the new kind of growth realities of the world into account, and that actually then causes some slower growth this year. But still, plan to date, we are ahead, and we remain focused on the execution of it, because that actually is something we can control, and we very much have made a lot of progress on.
Roy, what is the latest in terms of that investigation by the Department of Justice in the US into Philips and those sleep apnea recalls? What's the latest? And are you provisioning? Have you put any provisions aside for that?
There's no further update on the DOJ investigation. We continue to collaborate, so there's no further news on that. What we have seen actually, the sleep and respiratory care business starts to really contribute in a positive manner. We have seen actually growth coming back. We also have seen strong profitability, and that's also what you saw in the connected care margins this quarter, which actually almost doubled from last quarter in the same quarter last year. So actually we see SRC, sleep and respiratory care, becoming a positive contributor to our story, and we keep focused on how we can actually serve these patients in a better way with new exciting innovations that we also have been providing to them.
Yeah, and you talk about working through some of these issues, and certainly some of your biggest investors, two of your biggest investors, Exor and Artisan Partners, raising their stake, which is on some levels a vote of confidence in you and the team, Roy. Do you expect them to increase their stake further?
So I think they have, of course, shown that they really trust in the plan. They have confidence in the execution of it and also the long-term prospects. We have been actually showcasing all the latest innovations and the standard-setting new innovations, whether it's in imaging, in interventional, and in monitoring. And they are really excited by that. Also, the margin trajectory and improvement there is something that we have started to work on, but for sure we need to continue to work on, and we see much further upside also as part of the plan. So I think confidence is growing, momentum is building. We need to take new realities into account in an agile way, respond to that. But also, if you've seen what we did to the supply chain to address some of it, we made the supply chain much more resilient. We have been localizing and regionalizing so that actually we can serve China out of China, but also Americas out of America, so that we are prepared for any scenario that is unfolding, because we're just living a world that you need to be able to respond to in a very fast manner every day. Simplification of our organization was another big one. If you have seen the productivity improvement we made, 1.5 billion to date, was also on the back of some of the reductions that we did, 10,000 roles that we actually took out. So we keep on driving a strong control of our own destiny.
OK, and we'll see if that resilience is needed if we get a Trump in the White House. Roy Jakobs, thank you very much indeed, the CEO of Philips. Now, there's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. Now, one big focus for the markets this week will be the reporting. 5 out of 7 of the Magnificent Seven reporting earnings this week. And the context is a picture of slowing earnings growth. The earnings growth is still there. Don't make any mistake about that. But it is slowing, and that trajectory is expected to push into 2025, according to the analysts. Bloomberg Intelligence crunching the numbers on this. The earnings collectively at the Mag 7 expected to increase about 19% versus what, 4.3% for the rest of the S&P? That sounds pretty magnificent, doesn't it? But in fact, that will be the softest increase in earnings in about 6 quarters for the Mag 7. And in fact, since their peak in July of this year, Mag 7 is trending the lowest across your sectors out of the S&P in terms of the gains that have come through. Very lackluster gains since that peak in July. We'll be focused, of course, on the CapEx spend, particularly around those data centers and the hyperscalers, around AI. This could be consequential, of course, for this week. It will be consequential, the earnings story out of Mag 7. Coming up, we're going to get, of course, and continue to keep across what's happening in Riyadh, the Future Investment Initiative. We're going to bring you an exclusive interview with Goldman Sachs CEO David Solomon. That's from 5 a.m. London time tomorrow morning. And the day before the Future Investment Initiative officially kicks off, we're going to leave you some pictures of a panel taking place right now with our very own Germana Basecci. Opening trade is next. This is Bloomberg.